Okay, Dimitri.
Great, Kayum.
Yes.
Thanks for inviting me here.
Thank you for coming.
Awesome. So, with your new business, your background, I've always known you for a long time in the accounting field. This is your background.
I don't say new business because it's been running for 35 years.
Oh, nice.
So, yeah, it's not a new business. It's been going for all those years. But like in any business, as things change and progress, you've got to keep on top of the changes that are implemented by the various government departments. And so I pride our business, which is called Business Management Solutions. I'm Coach Q, that we try to keep on top of all these changes. It's not easy because things are changing all the time, every day. But that's one of our strong points. We try to keep on top of all the changes that's happening.
Great.
Yeah.
So me coming through as a client to open up a new business with a brother and maybe a third partner. Back in the day was a close corporation. That's no longer. How do you red carpet the people in to business that you clear all the red tape? How does?
Okay, so first of all, let's start on the different types of business entities that you can have. So closed corporations still exist. So if you've had a closed corporation registered all the years, and you still got it registered now, you can still continue running the business as a closed corporation. And then back in 2008, the Companies Act was amended, and then they did away with closed corporations, and they now only have PTYs, private companies. So that's probably one of the most popular forms of business entities.
Is it more expensive to do the financials?
Wait, let me before I get there. So the PTYs, like I say, one of the most popular forms of business entities. Then you've got incorporateds, which is almost as if it's a PTY, but it's more for professionals like the legal fraternity. You'll get a couple of doctors that will maybe have a practice running together. They form of incorporated, and they'll actually register that with their controlling body. So in the case of a doctor, for instance, they'll register that with the Medical Practitioners Council. In the case of the attorneys, they'll register with Legal Practice Council again. So they actually register that incorporated entity with their various controlling bodies. And then over and above that, we've also got non-profit companies, NPCs, which are also registered via CIPC. And
would that be like communities?
Well,
like the Greek community?
Well, they could, because they probably want to raise funds for a specific purpose.
Charities,
that type of thing. But coupled with the NPC, you'd also register with the Department of Arts and Culture as an entity that's allowed to collect money from the general public. So they'll give you a fundraising number, which you use together with your NPC number, which empowers you to collect from the public. Yeah. So those are basically the formal types of business entities. And then you've also got a trust. You can have a trust as a business entity, as a business trust, or like most people know, a trust to be a trust that they form to hold property or assets for generational wealth.
Yes.
So you've got that aspect as well. But currently, and when clients do come to me and ask me about trust, right now the Master's Office is in such a disarray. To make an amendment on a trust and administrative requirements on trustees is just so burdensome. So I always try to steer people away from forming new trust. If I try to form a trust now, I can draft the documents, I give it to an attorney, the attorney goes to the Master's Office, and then they obviously do what they need to do to register it.
Yeah.
Could probably take anywhere from a year, between 1 and 2 years, just to register a trust. So now you can imagine what it's going to take to make an amendment to a trust. That's another thing altogether.
Yeah, because we've got an existing trust.
Yeah, so at some stage also the master imposed a requirement that you got to have an independent trustee. And the problem with that is in South African circles, our banks don't understand the role of an independent trustee. So for instance, if you and I were trustees on the trust, we've got to now have an independent trustee who is an attorney or an accountant or someone in a position as an independent trustee. So now what happens, we go to the bank, we apply for finance, and the bank all of a sudden says, but we need the ID copy of the independent trustee as well. And the independent trustee doesn't want to be contracted to your business. He's only there to oversee that you run the business for the benefit of the beneficiaries.
He's not there to add surety.
He's not there to sign a surety. You understand? So now all of a sudden this gets rubbed in.
The banks want everyone.
The banks doesn't understand. I mean, and you put on the trust document, independent trustee in brackets, and then they still insist he must sign the surety. And then the says, no, but why? I'm performing a function. So it's difficult for trusts because as I just said to you now, from a banking perspective, and obviously all the issues that go with the master's office as well, right?
That's more systems. Maybe the systems don't handle it, so maybe he needs a login detail to the bank. I don't think
that it's the systems. I think it's I think it's more that the bank staff don't understand requirements. They're given a list, and they read the list, and they can't apply their minds to say, okay, we don't need this in this instance, we only need this. So they just follow a list, and they're so scared to deviate from the list. You understand? Because in case they're going to make an error and they're going to be held liable. So you can stand there and try and educate them, but it's not going to change things.
I know what it's like with the banks. We had 3 parties trying to sign up signatories, and keeping the 3 families.
In your family business,
at least 2 signatories have to sign for a transaction. Just setting that up, it took a good couple of months.
Yeah. So then the other way of operating your business is as a sole proprietor, which obviously it could be D-Mamak or Australian as...
And it's not registered then?
It's not registered anywhere. It's just you basically the business. So it'll be D-Mamak or Australian as whatever you want to call it.
And what is the requirements now for with the new financial year with the tax requirements?
No, before I think we're jumping the gun a bit. Let's just, we didn't finish speaking about the entities.
Okay.
So in an informal discussion the other day, I joked with you and I said that most people form a business over the weekend when they're having a braai and they have this great idea and they say, let's form a company. Monday morning comes, they contact their accountant, we're going to form a company, we're going to do this, this, and this. The guy forms the company and then company's there and it sits there, and a lot of people don't understand that once you form a company, there's certain requirements that's imposed on you in terms of the Companies Act. There's directors' duties, etc., etc.
You were telling about the different class of shares.
Yeah, we'll get to class of shares. So when you form the company, what you've got to do is you've got to submit an annual return to CIPC, the company's offices, once a year, and that's based on your annual turnover. But now you must not confuse this with SARS. It's got nothing to do with SARS. Although the systems are linked, so you can't say to CIPC, my turnover was 2 million, and then go to SARS and go and say it was 1 million. Because SARS will go and check on the CIPC system, see what you declared as your turnover on your annual return, and then obviously if there's a discrepancy, they're going to come back to you. Either CIPC is going to come back to you or SARS is going to come back to you. Okay. So nowadays with systems that are integrated, it's not worth taking the chance. And a lot of people, just to comply with CIPC in terms of being able to get that annual return certificate, they'll just put their no. which you can't do because, as I say, the system's all integrated. So you got to make sure and be mindful of the fact that if you're doing 5 million rands worth of turnover and you declare it to CIPC, you've got to declare it to SARS as well. And bear in mind that the annual return.
And if you're on the minimum?
Well, the minimum will be. Okay, we charge a fee. All right. So if the turnover is below $1 million, we charge our clients $450 because we've got to administer and fill in the documents as well. So you don't make a lot of money. You make like 150 rand
for the annual
out of an annual return. And then if it's over $1 million, we charge $850, and if it's over 10 million, we charge 3,750. And that's also it's a sliding scale with Cipro as well. They charge us as the turnover varies. Okay, right, and then besides that, there's also a beneficial ownership submission that's got to be done once a year. Now, the beneficial ownership submission is a new thing that's just been introduced in May of 2024, where they want to know who the actual owners of the company are. So prior to May of 2024,
what's the difference between who you registered with and?
No, well, you register a company with the director.
Yes.
So let's say the two of us are going to register a company. Yeah. We register a company, and you director, I'm a director. And as far as the banking goes, in terms of the company, the two of us will now go to the bank and we will sign all the documents, open the account, and we sign on the account. You've also got shareholders of a company. Okay, so for a one or two man operation like we're going to operate our business. In all probability, we'll be the shareholders as well. Okay, so let's say we've issued, I wouldn't say issued because the company comes standard with issued share capital of 1,000 ordinary shares, right? So we are equal shareholders and equal directors. I would take ownership of 500 shares and you take ownership of 500 ordinary shares. Now, let's say...
the governance then, is normally someone with 51% and one with 49%?
Well, most people just go 50-50. Really? But it depends. If you in a situation where the one party is more of a controlling party in terms of the amount of money that is introduced, then you can obviously play around with the percentages. But that depends on how you want to structure it.
But you can structure it with a different class of share for voting rights.
Yeah, but let's just stick to ordinary shares for now, because we don't want to confuse the viewers and sort of muddy the waters with all the other class of shares, because it can get complicated. So for the purpose of the exercise, let's just stick to the ordinary shares. So between you and I, let's say, let's just call it, we contributed 1,000 rand in totality, me and you, and I gave 55 rand and you gave 45 rand. Then the logical approach would be that I'm going to get 550 shares and you're going to get 450 shares, which will denote 45% and 55% respectively. Right, so in terms of the amount of money that we invested, or sometimes people also don't invest money, but they come on board with a skill set. And so you take the skill set into account, and it's by mutual agreement between you and I. I say, I can't afford it, but you put in all the money, but I'm coming with the know-how. So it depends how things unfold. Every situation is different. Okay, so what I was saying about the beneficial ownership submission is, like I said, new thing since May 2014. So prior to that, if you asked me who are the shareholders of our private company, I would say to you, well, CIPC didn't have or doesn't have a register, which they never had prior to May 2014, and then they introduced this beneficial ownership issue where you now obviously declare who the shareholders are, and again, that is largely probably to do with anti-money laundering legislations, because you could have we could form the company, and then along comes one of the big shot gangsters and they say, well, we want to invest in the company and We might know the guy, we might not. We say, yeah, fine. Well, what are you putting on the table? The guy says, I'm putting R1 million on the table. And we say, well, we 50-50 owners or 45% owners, and then we must now decide what percentage of our shares we're going to relinquish and give over to him for his investment in the company. Okay? So now he becomes a part owner of the company.
Which we've registered with the CIPC.
Which, prior to May 2014, it was only the director's name on the company documents. Even if you pull the company document today, it will also only give you the director's name. But if you know how to operate the portal, you'll go and pull a beneficial ownership certificate where you can actually see who the owners are. All right? But that doesn't still stop you from saying that it's only me and you that are the owners. Nobody's going to know that.
Is that when they use companies to be a director? So they use an entity.
Or they could use an entity, yeah.
And then
but like
you have a company, you don't have a person. So now you need to know the person that's behind
the company. Yeah.
Is that what that beneficiary
Yes,
is?
but also, like I said, I just said a minute ago, nothing stops you and I. Let's say we knew that this guy that's coming on board is a drug dealer or gangster, whatever the case is, and he's a prominent person, for instance. Nothing stops us from taking the guy's money. He maybe doesn't want to be on the books, and we say it's only us, and it's our money. Okay, but now the question.
Essentially, it's a loan then.
Yeah, but it could be a loan.
Yeah.
But now the question arises down the line. Let's say any questions are asked. Where did we get the money? You understand? So, like I said to you in the beginning, the way systems are integrated today, it's not worth taking the chance to even tell that white lie. Rather just be upfront with your business and declare who the owners are, declare who the beneficial owners are. In the case of beneficial owners, we refer to them as the shareholders of the company. So systems are so integrated now, rather not.
So if that was a loan,
then we should put a loan agreement in place.
Put a loan agreement in
but
place.
Then the question would arise that does this person, who is a person of interest in terms of our authorities, for instance, maybe, does he want to be known?
Yeah.
He may not want to be known. So then the problem arises in who's going to be the face of the loan agreement.
The spokesperson.
You see. So then hence I'm saying again to you, it's not worth cutting corners in these respects. Rather keep everything clean. You see. So now I've explained to you about the responsibility of the director of the company to submit his annual return and the beneficial ownership declaration once a year. So a lot of clients that come to us say to us, no, we're all compliant. Okay? And then I say, oh, no, we submitted the return to CIPC. And then my next question that comes out is, CIPC is one thing. You submitted your annual return and your beneficial, you complied there, but you haven't necessarily complied with SARS. And then the guy looks at me and says, oh, but the company wasn't trading, we didn't make any money. Right? And I say, okay, fine, that may be so, but you still got an obligation to submit a nil tax return to advise SARS that the company is dormant. So what you find very often is that a guy, like he just said to me, now you log into his e-filing profile and you discover, no, but there's penalties for non-submission of returns. And the guy says, but I never made any money. No, you never made any money, but you got an obligation to submit the returns and comply with the document requirements. And if you don't comply, they're going to fine you and penalize you.
Yeah, I normally request a tax clearance certificate to make sure that everything's...
A tax clearance certificate, I always tell people, it's as good as the papers written on at the time when you get it.
Yes.
Because as I just said to you now, and I come across this very often, is that The guy says, "No, I've complied." He's complied, like I said, with CIPC. And in quite a number of cases as well, in their minds, they've complied with SARS, okay? Because the business was trading, okay? And granted, it probably never made any money, okay? But the client or the accountant goes and submits a nil tax return, even though the company was trading.
It had turnover.
And they had turnover, and
they might not have made money.
The simple thing for the accountant to do is quickly submit a nil return. There's your tax clearance, sir. Okay? So therefore, I say the tax clearance is only as good as the papers written on at the time that you receive the tax clearance, because SARS got 5 years. They can go back and go and query. Yeah. And I've seen this before. I've had a client, as an example. She has a restaurant. And at some stage, she said to me the turnover was 1.1 million, right? And I said to her that, are you sure this turnover is 1.1 million? Because I need to see it on the bank statement. No, this is the turnover, she says. So I go according to that turnover, right? A couple of months later, or a year or two later, SARS comes back with the reports that they've pulled from iKhokha, who was one of these like Yoka.
Oh, yes.
Right, so they went and pulled. Yeah, they went and pulled a report from iKhokha, and the iKhokha report says the turnover through their machine was 1.4 million. So how could you have 1.1 million here that you've declared, right?
Okay.
And then it becomes an issue, and then you've got to sort of explain away why there was a discrepancy in the turnover, and most times in that cases, they impose what's called understatement penalties, which can be up to 200% at their discretion.
Okay, so they wouldn't have given so much in refunds.
Sorry?
She wouldn't have given 300,000 in refunds.
No, and if you did, then you're going to have to declare. You're going to have to sort of show where and how you refunded these people the money.
Yeah.
Unless you gave them free burgers because it's to take away your restaurant, but no, I mean, yeah. So there are ways that SARS can go and check whether what you declared is 100% correct, and if not, as I said, that tax clearance certificate that you have and you think it's worth
that's more prevalent now.
What?
Because everything's coming through on credit card machines.
It's easy to track now because I mean, you walk in, like I think we discussed this the other day, that you walk into a Vida cafe, for instance, and then the guy they say, no, we don't take cash. So everything is running through a system. So there's not that amount of cash in our monetary system any longer, because everything is on card or EFT or whatever the case may be, SnapScan and all sorts of traceable payment methods, which is, I suppose, a good thing.
Yeah. We have a tenant that pays with, he can't pay cash anymore. All his customers were always cash, and he got this Safe to Safe, this company that does the similar to Yoko, but they keep the money and they have a portal, so the cafe can go buy its goods from Macro and stuff through this portal.
Isn't this shop to shop thing or something? Yeah.
There we go.
I've heard of this thing. I'm not exactly sure how it works here.
So the tenant's money is all sitting in this portal, and he can't pay us, and he's got to send it to another shop to shop person who he knows to get it into his bank account.
And he gives her the cash
and
or
then
something.
He goes deposit the cash in our bank account to pay the rent. What I did last year is I got registered as a supplier on Shop to Shop.
Okay.
Just so you could pay his rent.
So you go through that just for one tenant?
Yeah, just for one tenant.
Anyway, I'm not sure exactly how that Shop to Shop system works.
Yeah. But there again, whatever he was declaring before, he needs to be very careful to the rand that he's got to declare what he's getting through his machine.
Here's a simple thing, right? Like, so Okay, so now you've had this braai on the weekend, right? And you've had this wonderful idea. You registered the company, and as I explained to you, all the requirements that you need to meet in order to remain compliant, just from the CIPC side. In another segment, we'll touch on what's required by SARS, but just a simple thing. Like, I don't know what your tenant's rent is, but let's say the guy's paying 20,000 rand rent a month. So, recently they've upped the VAT threshold for companies from R1 million to 2.3 million rand. And it's amazing how people would come to us and we'd go through all the questions we normally ask them, and I ask the guy, do you do over R1 million turnover a month and for the year? And then the guy says, no, definitely under R1 million. And then the next thing I say, okay, what's your rental? And then he says 30,000 a month. And I say, okay, 30 times 12 is 360,000 rand, right? Now you're left with 640,000 rand. Okay, what's your wage bill per week or per month? Guy says, no, wage bill is 40k a month. That's okay. 4 times 12 is 48, right? How much are you left with now? And then he says, oh, well, okay, now there's 200k left. 200K. So from the 200k, he's got to pay his accounting fees, his bank charges, his electricity, stationery for the business, petrol for the vehicles that's operating. So how do you run the business on 200k? Right? So that's how, and exactly the questions that I asked you now, that's how, when people lie on their tax returns, that's how they caught out. Okay. Because it's simple maths, it's not complicated. So but like I say, we'll touch on SARS issues in another segment down the line. Okay. But if I may just, as you asked, the initial question was, what are the different types of business entities? And then I said to you, CC still existed, but you can't register new ones in the PTYs. So with the advent of the PTY, it's made it much simpler and easier for a small business to take on investors and shareholders by them being able to issue shares. And if it's used correctly, the system of a PTY, if it's used correctly and the share certificates are issued, those are formal legal documents that when you issue a share certificate, it's a legal document. So the investor or the shareholder also has recourse in terms of the law if the business is not run as it should be run for the benefit of the shareholders. Okay, so in other words, if the director of the company is negligent and reckless in administering the company, he can be held liable criminally for mismanagement of the company. So it was a good thing of the introduction of the PTYs, because it's allowed smaller business to take on investors, and in so doing, obviously grow their businesses to another level. So that's the nice thing of PTY. But one of the things that I have on my brochure that I send out to potential clients in the section of registering the company, it's very clearly says on there, don't just register your company, let us help you structure it. Because there's so much within the Companies Act that you can use to your benefit as a small business, and obviously making use of what's at your disposal, and sort of in a way corporatizing your small business. Okay. You understand? And when
you're able to pay out dividends,
etc., and again, this is something we can touch on later down the line. As opposed to paying your 27% corporate taxes, if you declare a dividend within the company, you pay the dividend withholding tax of 20%. So there already you're saving 7%, as opposed to declaring it as a profit in the company. So there's many ways to reduce the amount of tax you've got to pay legally. Just by doing and just tweaking things here and there. So it's a lot of benefits to owning a company. Anything else you want to know? What else can I?
As far as the company's going, I mean, do you do the registrations for the staff, like SDL?
Yeah, again, like I said, that's a segment all on its own. We do offer a payroll service which can integrate with our monthly accounting retainers that we charge our client, or it can obviously be a standalone service that we offer.
I mean, like workman's compensation, just making sure that you've registered a company, but you've actually registered with all the organizations that you don't know about.
Yeah, so when a client comes to us, I will typically spend 1.5 to 2 hours with a client for the first time, because I found that most people are not coached correctly, and that's where my self-imposed title comes from, Coach Q, because I found it apt to actually coach people as a business coach, because many accountants nowadays say, send me your bank statements, give me this, give me that, and he does the financial statements, he submits it to SARS, and that's all you hear of him until next year.
It's just a document requirement.
You understand? So I don't operate that way with my clients. We are coaching them all the time. So as an example, when clients bring their documents every second month, because many of them are VAT vendors, I get to see their bank statements. And once I look at their bank statements, I check through the transactions, and I will pick up the phone and I'll call them. And I remember very clearly this one specific client of mine that he had on his business bank statement swipes on the business card for hairdressing salons and KFC and all sorts of other stuff. So then I picked up the phone and I phoned him and I said, hey, what are these things for hairdressing salons here? And he says, no, I send my mom to the hairdresser once a week or once a month. And I said to him, but that's not a business expense, that's a personal expense. You should be paying yourself a salary like I told you. And if you want to send your mom to the hairdresser, give her your card, your personal card. She can swipe a personal card.
Yeah, that's not a business benefit.
It's not a business benefit.
Well, she might look after you.
Eh? Yeah, so that's why I coach clients along. And sometimes you've got to tell the clients over and over again, but bear in mind that this is my job and it's not their job. So I have to unfortunately keep on telling them the same thing until hopefully they get the picture. But that's probably the role of the business coach, to keep on coaching the clients.
Great. But and it's forever changing, right?
Yeah, it changes all the time, because there's, like I said to you in the very beginning, the systems are changing all the time. Every couple of days things change. I mean, I don't know if you've ever tried to contact the CIPC offices.
Not
Never.
No.
Okay, I mean, years ago, if you ever got through to them on the telephone, you were lucky.
Yeah, I never waste my time on the phone. I'll drive there rather.
Nowadays, they're based in Pretoria. Nowadays, we can pick up the phone and somebody actually answers the phone on the other side.
Oh, wow.
And we can actually resolve queries or issues that you have.
That's amazing.
Unlike SARS.
Okay.
So SARS become a nightmare to resolve any issue. But that's just part of the game, and we're gonna just obviously go with the flow. Nothing else we can do about it. But CIPC has changed to such a degree that they've become a functioning organization.
Because they're more automated, they're computerized?
I don't know exactly what has transpired at CIPC, but they should be organized, because they're the company's office where you register a company. It's like Home Affairs. You register a birth. It's the same thing. You register a birth of a company.
You wouldn't be contacting them every 2 months or anything.
No, not from your perspective as a client, but from our perspective, where we're doing various changes to companies, etc., etc.
That you can amend the beneficiaries.
Sometimes we submit documents via the electronic portal, and there's a problem, then we got to call them and ask them why. And I say, no, you didn't do this, or you did this, or this has changed, or that has changed. So that is what we're finding with CIPC on a regular, almost on a daily basis, basically.
Okay, so you take that out of the client having to do it, so that they can just go and do their business.
Yeah, you
and
do.
not spend hours on the phone trying to fix things.
Yeah, you do get those clients that try to do their own annual returns. Instead, they love to pay us the 150 rand to do it, and then they get halfway through and say, you rather do it. So I always say, let the plumber do the plumbing, let the accountant do the accounting, let the doctor do the doctoring. You understand? Don't try and be a jack of all trades.
Not YouTube.
Yeah. Yeah. So that's, I don't think there's anything more in terms of the registering of a business, unless you can think of
really
any other.
Basic.
Yeah.
We covered from the sole entrepreneur and to the partnership.
Just another thing, I mean, the sole prop or sole entrepreneur, as you called it now, like I said in the beginning, it is a form of business entity, but the banks are very loath to do business with a sole prop. They prefer doing business with a registered entity,
PTY.
a PTY or CC in the old days, incorporated, as I said to you. Yeah, because I mean, you can trade as anything you wanted today and trade as something else tomorrow, and it's not recognized. You know, so you've got to have a recognized form of business.
I registered a company. I needed to do an NDA, non-disclosure agreement, and I wanted to do it on a company.
Right.
So it wasn't in my personal capacity, and so I registered a company.
Right.
PTY.
You did it online?
No, I did it with a
broker.
Yeah.
You should have come to Coach Q.
Yeah, I don't think you're around then. Yeah. Well.
What do you mean? You know me for almost 40 years.
Anyway, it was the account my dad was using, and I just asked for that, like you said, just quickly, just knock a company up for me, just for the sake of.
So were you aware of what I just told you now in terms of the requirements?
Mine was it's just me. It was just
no.
my own shares.
What I'm saying is, when the company was registered, were you aware that you've got to submit an annual return?
Yes. No, I know that.
So you know that, but that's only because you've had other companies before.
Yes.
Okay, and the beneficial ownership, did you know about that?
Yeah, the accountant had to do that.
Okay.
Yeah.
So, but did you know about it though? Or?
It was requested from them, but this is going 3 years probably.
But remember, beneficial ownership only came in May 2014.
2014, so it was.
But I mean, you've had other companies.
Yes.
But have you encountered
with those old companies too?
No. I mean, like if you put yourself into the shoes of somebody that was maybe working in a corporate environment and they decide they're going to resign and now they're going to start something else, do you find that there's a lack of information for these people? Because you'll go into a place like Swiftridge or Shelf Company Warehouse, they'll register the company for you, and then off you go and you've got your company and you don't know what you've got to do. You just got the company documents and that's it. Now what?
Yeah, it's not something I take the chance on doing myself.
Yeah.
I let the experts do, because I don't want to be wasting time doing bookkeeping work.
No. What I'm getting at is, do you find that there's a lack of information for somebody entering the business? Let's call it the business market, where he's forming a company, etc., because where do they go to get the guidance? You know what I'm saying? Because the guy that's forming the company, he just wants to form the company and get paid for forming the company.
Yeah.
And that's it. Nothing happens beyond that. You see, and that's why I found
and there's
that.
no contact.
Yeah, that's why I found I'd rather coach people so that you impart the knowledge to them and say, this is what you need to do. It's not just forming a company. You now have these requirements on you and you need to fulfill those requirements.
And how does that mean for your customers that you've registered a company when it's on your credit card? You know, it's like it's embossed the company name on
yeah.
So it adds a level of credibility that you're legit, you know. that they're supporting a business that is paying their taxes, doing their books.
It doesn't necessarily mean that the guy formed a company and he's got a bank account running that he's actually paying his taxes. You understand?
It's a start, right? He's registered.
He's registered, so that's the beginning. But then I had somebody there last week, Friday, at my office, and this woman rents out a property, and then she says, and I said to her, okay, we need to account for the rental income, right? And she says, yeah, but I'm not making money out of it because I've got to pay the bond. I said, yeah, but okay, this is now a secondary property to the one that you're staying in, right?
It's not your primary.
So, yeah, how are you affording to pay your bond where you're staying? So she says, no, from that rental income, the excess money there, she said, but I'm not making money still because I'm just covering all the expenses. So I said, no, you're not understanding. You understand what she's saying? I mean, like, she's thinking,
got enough to cover the other property.
She's thinking that I'm not making money yet because I still need to cover this other property.
I got mine expenses.
So yeah, so now only the time when I'm starting to make a surplus after covering my living expenses,
yes.
And then I'm going to start paying taxes, and this is what she thinks. You see, so yeah, but like I say, you've got all different types of clients coming and mentalities coming. You got to deal with it. Yeah. Okay. I think the next segment that we'll do probably in the next few days will be, now that you've registered your company, what's the next step?
Nice.
What do you do once you've registered the company? Do you, in terms of SARS, etc., what's the documents that you've got to keep? What's the records that you've got to keep? All that type of requirements. I think that will probably break up into 2 or 3 segments because it's quite lengthy.
Okay.
Okay.
Thank you.